Hello, I'm Alison Blanchard and welcome to Smart Business Basics, and tonight we're going to talk about insurance. And this is Brent Shanks from Aon. Hi Brent. And he's going to take us through insurance. So take it away, Brent.
Thank you. Thanks, Alison. You've done a number of different modules and sessions with Alison to date, so you've learned a little bit about company structures probably and expenditure and those types of things. So what I'm going to cover tonight is a little bit of an overview on insurance. I'm not going to get into any particular one facet of it in great detail. Trust me, there's a lot of detail around insurance that we could get involved with, but I'm just going to give you a bit of an overview so you've got a feel, if you're someone that's looking to go into business or you're in business now, that you understand what some of the things are that you just need to consider and put on your radar to make sure that you've covered off. So in terms of insurance, I kind of use the three words of can, could and should. Okay, so when I'm thinking about insurance, there's things you can insure. So you can insure your pets if you want. You can get pet insurance. Do you really need to? Is it going to be the absolute financial end of the world if something happens? So you need to kind of put that into consideration. You could insure your windscreen in your car. You could add that as part of your package to your policy, or you could add as part of your vehicle policy insurance roadside assistance. Okay, really good, really convenient service, so you could add that. And in terms of being the business owner, the things you should insure. So these are the things that are going to provide a pretty massive impact on the business if something goes wrong. And there fundamentally are three areas that we want to consider when we're talking about insurance in the business sector. So we're going to be talking about assets, we're going to be talking about liability, and we're going to be talking about people. Right. So in terms of assets, what we're thinking about is the things that you own that you've paid money for. So it could be a vehicle, it could be the building, it could be the stock that you've bought, it could be the equipment that you use. Okay, so there are things around your assets that you want to insure, and depending on your level of involvement within the company and how much equity you've got in the company, you might want to have different ways of going about that. So the vehicles, for example, you might want comprehensive, or for affordability's sake, you might want third party only. As the business owner, you need to consider, if I've got third party only on the vehicle, that's my one vehicle because I'm the self-employed plumber, and that vehicle crashes into someone, the third party is going to cover the cost, but you're going to be without a vehicle. So there are different aspects within the types of insurances that you've got, but you really need to consider what's the best outcome going to be for me if I need to put this insurance into play. Because we'd like to think that we get the insurance, we file it away in the drawer and we don't need it. But when you need it, when the rubber hits the road, you need to make sure that you put the right kind of cover in place. So as an insurance broker and a registered financial advisor, we help people understand where the risks are, what the liabilities are, so we're going to touch on that shortly, and do an assessment with them on what is going to be the best outcome for them and the best fit in terms of insurance for them. Also on assets, just flicking out of the commercial world for a little while, you may be aware that insuring a house is now different to what it was kind of 12, 18 months ago, pre-Christchurch earthquakes. So they've moved now to a fixed sum insured rather than a replacement value. So if you haven't had a renewal in the last 12 months and you've got one coming up in the next couple, there'll be a different approach that you'll need to take to your own domestic insurance on your house so that you've got the right amount of cover. So essentially it's agreeing with the insurer, this is the maximum amount of claim that I can make against you if a catastrophe happens, if there's an earthquake, if there's a flood, if there's a landslide, whatever the case may be. So they won't replace it to the size, they'll replace it to the dollar value.
In terms of body corporates, where insurance is included in the body corporate fees, is that the same change? It affects that the same way?
Essentially it is, but in terms of body corporate, obviously it's managed quite differently. It's seen more as a commercial than a domestic insurance, but the body corporate needs to be fully aware that they've got the right amount of sum insured. For example, if it is an apartment block and it's a landslide, there may be some remedial work that needs to be done in terms of landscaping or excavating or demolishing. So all of that needs to be put into the mix, and that's even before the rebuild starts. So important aspects to consider. So in terms of liabilities, this is where you need to consider what are the potentials of me doing something in my business that could affect someone else. Okay, so typically the main one is what's called public liability cover. So if you injure someone, or you break something of someone's, or you damage something of someone's, what's the liability outcome going to be? And to, I guess, put it into a real world scenario, let's say you wanted to open up a coffee cart business, and you used to work for Sealords or Tallies or one of the sawmill businesses down here off Quarantine Road, and they said, yep, you can come and work on site if you want. We know that the guys don't like coffee from the cafeteria, they'd rather go and buy something and rather get something really nice, so yep, come and set up your business. So you go down there, set up your business. All of a sudden, after being happily ticking along for 3 or 4 months, there's an electrical fault within your little portable coffee cart, and it sets off a fire that, let's say it's at Sealords, that fire then goes into one of the cool stores and takes out the cool store. It's not just your coffee cart you're going to have an issue with replacing, it's the damage to the cool store and the stock inside the cool store. Okay, so your liability cover needs to reflect the type of business that you're in. So we've got clients who are engineers, for example, and they'll do a lot of work with big companies. And those companies say, yes, we would like you to come and do the contracting work, we'd like to sign you up. You've got to have $10 million worth of public liability cover, otherwise you're not coming on site. So depending on the type of business you've got, understanding what your liabilities are is really important. The other one about liabilities that I thought is probably worth considering as well is around directorship. So if you're a director of a business, be it you might be a silent director and your partner runs the business, you're a silent director, you're still liable. Okay, so it's really important to understand what your responsibilities are if something goes wrong. And probably the most recent case that most people are aware of is the Easy Rider fishing boat that went down a couple of years ago. And the wife of the captain of the ship has recently been in court defending herself. She was a director of the business. She had nothing to do necessarily with what happened on that day, but she's now been taken to court to say there were some things happening within your business practice that weren't safe, weren't good, they put a lot of lives at risk, and we're going to charge you. So your liabilities, you just need to make sure that you understand what they are. I've got some packs to give away, and it talks about all the different, what's called classes of insurance. And it's kind of a 2-page document. Some of it's quite small print to kind of compress it on there. You don't need to be concerned that you've got to tick every one of those boxes, but it just outlines, hey, what are the things that you need to consider in relation to your business that might be pertinent, might be relevant. Okay. The other thing around liabilities, around directors, a couple of the directors in finance and investment companies recently have come up to court as well. They're putting up their hand in their defence, saying, well, it wasn't me that necessarily gave the advice to mum and dad to come and put their money into Bridgecorp, but you're a director that signed off the annual statement that, or the prospectus, saying you had really good financial credit and you were a strong company and you were investing in the right places. So they're now taken to task, even though probably they were thinking when they signed up to be a director, if I come along to some meetings, I'm a public profile, that's going to bring people into the business as investors, everything's going to grow, that's good for everyone. just need to think about what the outcomes can be. And in terms of people, this is the area that I specialise in most in terms of risk management, is working with small businesses so they understand what the people risks are in their business. So it may be that they've got a number of staff that they're employing, or it may be that they are a sole trader or working on their own as a limited company. So in terms of people, the thing that we really want to make sure that we've got covered off, debt's one of them. So that debt is there any financial equity that you've had to go out and raise to start this business up? It could have been that you needed to go and get the Toyota Hiace so you can start your plumbing business. It may be that you've needed to go and get some investment from the bank against your mortgage to go and hire the premise that you're going to be operating out of. So we want to make sure that we've covered the debt. It could be to family. You might have borrowed money from a family member. So we want to make sure that we've got that covered off. Because if something happens to the person, and essentially if that person is the business, how does the business then repay the principal on the debt if that person can't work, that person can't generate the income? So what we look at from a people perspective is what's the financial impact if that person is unable to work. So debt's one of those things that we need to make sure we cover off. The other one is around cash flow and income. So cash flows in a business sense and income maybe in a personal sense. So if we take an example of the plumber, one-man band operating by himself, he falls off the ladder, busts his shoulder. He's out of action for 3 months, and then he's going to have to slowly get back into work and recuperate. In terms of cash flow, not being able to work and send out invoices, not great. So it's going to put some pressure on the business. He's still got the leasing contract for the Hiace that he's bought. He's still got to maintain those payments. Otherwise, someone's going to get a bit grumpy with him, be it the bank or the vehicle dealership. He's still going to have other outgoings potentially in terms of equipment hire or leasing that he's got, and those types of things, and other bills to pay. And it potentially has an impact on other people, being his family, in terms of the income that he brings into the household. So we make sure that we look at those risks and we understand what they are, and we put the right kind of parameters and structures in place. Depending on the nature of the business, we might need to look at what's called a buy-sell agreement. So this is when people have gone into business together. So Alison and I decide we really are quite compatible in terms of business partners. She's going to do the accounting, I'm going to do all the insurance, and we're going to start up a business together. So we need to consider, okay, what's the investment that both parties have respectively put into the business? Because if a tragedy happened to Alison, her partner might come to me and say, well, look, Brent, you're not an accountant, you're not particularly good with numbers, you're great helping people with risk management, but this is going to have an impact on us. We put in X amount of dollars into the business. I'm, by default, the partner of Alison's 50% shareholding in the business. I want some money for it and I'm out of here. So we need to understand what happens, what are the triggers if you're in partnership with someone around these things. So we put in place some risk strategies that say if something happens to Alison, we've got some insurance behind it to back it up, be it terminal illness or life insurance or cancer cover or something like that. So we understand what those triggers are, and we've got a documented exit strategy from the business in terms of a buy-sell agreement that says I will pay Alison the 50% share in the business to her estate and her family if she dies. Therefore, I understand that there's going to be business continuity, I'm taking that over, and her family have the knowledge that the money they've put in and the effort and time they've put into the business is going to be paid back out to them. If you don't have that kind of thing in place, and we have seen it happen, is that it tends to get into a bit of a legal fight. The lawyers are the only ones that kind of win out of that scenario. If we take the example of Brent and Alison, it might be that her partner still says, well, I'm still going to take the director's salary, thanks very much, you're still going to pay me. But I'm looking at my business going, but my chief accountant's not here. how can my business trade without my chief accountant? It was 50, it was half the business. That's where the cash flow came from. So you need to understand what those risks are if you're going into business jointly with someone else. And some other things that you may have covered, may have thought of, may have come across is ACC. And for people that are going into business and being self-employed from the outset, this is something that your accountant will give you some advice around, and we'll probably give you a little bit of assistance with as well, in terms of what's going to be the outcome if ACC gets involved. So let's take the self-employed plumber, for example. He's just started out in business. It's been going for 6 months. Took a little while to kind of get some customers on board, but it's starting to tick along nicely, thanks very much. He hasn't had a full year of returns yet in terms of his financial accounts. Something happens and he goes on claim with ACC. He's fallen off the ladder and broken his shoulder. ACC are going to say, okay, well, show us the money that you've lost from your business. Where's your lost income? He's going to say, actually, I haven't paid myself a salary for 3 months because I've been trying to pay the van off. Well, what were you doing before that? Oh, I was working for someone else. Okay, well, maybe we'll look at some of what you were doing before, but you're actually self-employed now. So you should have had your own ACC levies paid for and set up. So we need to understand what's the outcome going to be if ACC is involved. And typically when we look at insurance claims, around 70% of insurance claims that last over 6 months have nothing to do with an accident, nothing to do with ACC, they're sickness and illness related. So the reliance on ACC for anyone that's self-employed needs to be really well thought through, because if ACC for whatever reason doesn't come to the party, what's the backup plan? And you might need to get some money to pay for some medical treatment, for example. If ACC don't come to the party, where does that money come from? Because you're the plumber and you can't work, you can't generate that income. Where does that come in? All right. For self-employed, depending on the structure of the business, there is something called ACC Cover Plus Extra as well. It's not widely talked about by ACC. It's only for self-employed and for certain types of self-employed structures. But you can agree with ACC when you start out in your business how much money you want to be covered for with them, and they use what they call a replacement ratio, a replacement lost income ratio. So essentially they're saying, as a plumber, we'll just use that example again, they're saying on average they might earn $70,000. So we'll cover you for X percentage of $70,000. You're only just starting out in business, but let's agree up front what that amount's going to be. So it gives the self-employed person a bit more certainty around, if I do need to claim, what's it going to look like? And it also gives ACC some certainty in terms of how much levy do we charge this person applicable to what their income's going to be. So it can be a good outcome. Again, depends on circumstances. You certainly need to get some advice around it. Okay. That covers the main principles around assets, liabilities, and people. They all need to be looked at. They all need to be considered. In terms of people and how insurance works, I just thought I'd tell you about a couple of local situations where we've had the insurance come into place and it's made a significant difference on what the outcome's been for the business owner. So if I think of two examples, there was one a couple of years ago. We got a phone call on a Saturday morning from an accountant saying that John Smith unfortunately has had a heart attack and he's lying on the lounge floor and his wife's a mess. Can we quickly tell him what insurance cover John had? So we could do that quite quickly. Told them, reassured the accountant. The accountant needed to spend quite a bit of time in the business to try and tidy things up. The wife didn't want to continue with the business. They were an engineering firm. And sadly, that was on the Saturday. By the following Friday, one of the companies that they did a lot of work for, that they had kind of a gentleman's agreement about servicing their particular fleet vehicles, pulled the contract. They said, no, John's not here, I've dealt with him for years, we're going to go down the road to someone else. So the wife was like, oh, well, I still want to sell the business, so at least I've got the guys here and we've still got some loyal customers trading with us. The engineering company that the fleet vehicle customer took their business to went and tapped all the other guys on the shoulder from the previous work and said, you know the trucks, you know the diggers, you know the bulldozers that we bring into you, come and work for us because we know you're not going to get much more business in. So within 2 weeks, the biggest customer they had gone, and the dealership arrangement they had gone because it was more of a verbal than a written agreement, and all of a sudden the cash flow was absolutely through the floor. The wife couldn't sell the business, there was nothing to sell. Thankfully, we had looked at the people side of it and said, if something happens to John, what's the outcome we want? We want to be able to pay the debt off, we want to be able to provide the widow with some ongoing income so that she can stay within reason, within the lifestyle that she's been accustomed to for the last 3 or 4 years. So thankfully we had some insurance in play. There was another example from one of my colleagues in the North Waikato, and again this was related to people. It's not in the business sense, but it just gives you the sense of what the impact can be if the unexpected happens, and insurance is about that. Insurance is about covering the things that you just can't cover yourself. You want to put your money into a pot, into the hat in the middle. All the other customers do the same, and some of them are going to take their money out of the hat throughout the year. So one of my colleagues, Greg, had some new neighbours move into their area in North Waikato, quite a kind of rural lifestyle block area with a bit of acreage for the kids to run around and get ponies and that type of thing. And they had some new neighbours there. They'd been in there about 6 months, and one Saturday morning the ambulance arrived and steamrolls into the driveway, and all the neighbours are kind of looking around going, something really not good has happened, because they arrived in a hell of a hurry. And about an hour later, a couple of cops come up and they park in the driveway as well. Okay, this isn't good. Then they disappear, and there's a lot of coming and going from the house, but they're really not too sure what's happened. And 2 weeks on the Friday following that, there was a mortgagee sale at the front. And Greg and his wife had gone over and said, look, what had happened? And the widow, the wife had said, well, my 27-year-old husband had a brain aneurysm while he was in the shower and he's dead. And we talked about taking out life insurance. We didn't have to get it as a compulsory requirement for the mortgage, so we decided, well, we'll try and save our pennies and not take it out. But now I can't make the repayments on it. And unfortunately, there's no money coming into the house for me to make the repayments. I think they were from overseas, they didn't have any family or friends or anyone else to rely on. And because of the size of mortgage they had and the way the mortgage was structured, there was just no way out of it for her. So unfortunately, it was a really bad scenario. And just to end on a slightly more kind of positive note in terms of an outcome, again, based around people and the things that we look at for people. There was a local retailer in town who about 5 years ago was diagnosed with pretty nasty cancer. He had to go down to Christchurch and have the most serious cancer operation treatment that you can have in the South Island. He did that down there. Thankfully beforehand we'd looked at what sort of insurances would the business need if something happened to him. He was the mainstay of this particular retailing business. So we had some cover in place that said if you get really seriously sick, here's 6 months worth of income. Don't worry about getting into work. Cash flow is going to be fine. Keep the doors open and make sure that you can trade on as a business, because in theory you're coming back into the business. And for him, he finished his cancer treatment and he did come back into the business. It brought him an opportunity to keep the doors open. Subsequently to that, he was able to, I guess, take a bit of a life check and say, really, what do I want to do? Do I want to be working in a retail environment in a pretty competitive marketplace until I retire, or do I want to do something else? So being able to trade through that set of circumstances that he had allowed him to put the business in a financial position to sell. Had he taken 6 months off work, somehow tried to keep the doors open and keep the cash flow going, probably wouldn't have been as viable an option to sell moving forward. But we had that buffer, we had the insurance, we had the catastrophe fund there, and we could put it into action pretty quick smart. So just some local examples of insurances and how they work, Happy to take any questions that you guys have got around your own businesses or anything generally that I've covered tonight.
Is there a normal amount for public liability insurance that you should take out?
You probably, in this day and age, you probably want to be looking at $2 million as a minimum. It might kick in and pay for defence costs, it might kick in and pay for out-of-court settlements. So there's a number of different things that it can be used for. But again, it's depending on the type of industry and the type of operation that you've got. If you were a logging contractor, for example, you probably want a pretty high public liability cover, just in case you start a fire and burn the whole forestry block down. Because if that's the case and someone's lost their revenue and their capital and all of their investments, they will have a go at you, because they want to recoup all the hard work and the money they've put into it. So having that is absolutely critical.
But if you're a business from home, because I have a few clients who are like that,
Yep.
Do they still need $2 million?
Probably depends on the type of business that they've got, Alison, but let's, for example, say maybe they're doing
A hairdresser.
beautician work or a hairdresser. Their public liability exposure is probably considerably less. So they probably just need to find, I guess, the checks and balances that make sure it's the right type of cover for what they've got. So important to understand what the business is, what the impact could be. It might look like a really bad hair style, and that might be an issue for someone, or it could be that they, affect someone's scalp with a too strong a mix. And there needs to be some skin grafting work or whatever the case may be. Worst case scenario.
How often would you recommend a review of your insurance?
Every 12 months.
Every 12 months?
Yep.
How commonplace is it with insurance agencies to basically adjust asset-wise? Assets can tend to fluctuate.
Yep.
Is it a case where the insurers will automatically adjust that, or is it the onus is on the owner to change your
to a large degree the onus is on the owner.
Yeah.
But with your insurance advisor or your broker, you can hopefully have a conversation and communicate with them what's the adjustment necessary for. For example, if the business has got more than one vehicle and they've added another one on, you probably don't want to wait 12 months to add that one on. You probably want to add it on straight away to make sure that you know that it's covered. But there may be some assets that you know over time are going to depreciate.
So vehicles is a good one of that. Like each year you would have to be revaluing the vehicles. Like I would have to be revaluing the vehicles each year to get the correct pricing.
Yep. Because if there was a total loss on the vehicle, you might want to make a claim. Just take the Toyota Hiace that's a couple of years old. You might want to make a claim for a full replacement on it.
Yeah.
That's quite different than a Toyota Hiace that's 10 years old, that you're still paying a full premium for because you've still got cover at 30 grand. But in actual fact, out in the marketplace to buy the same thing second hand is going to cost you 15.
Yeah.
So depending on obviously what the type of asset is, it's important to make sure. It could be a building, so the building asset might actually be going up. Vehicle assets tend to go down.
So that will be the case with buildings now, with the change of legislation, that each year you'll have to adjust how much you're insured for.
Yep, and the onus is very much on the owner of the building, be it commercial or residential, to make sure that they are comfortable with what that sum is. So you can either get a valuation done, so you pay someone to come in and value the building, so you get a written report that says the building is worth this much today, and then you also need to think about, well, demolition work, what may be needed in that front. I've got a couple of retaining walls, I've got a creek that runs behind it, could be flooding, what are the issues that I've got? And also on the commercial side of things, particularly around earthquake strengthening now. So the value of a building that's been earthquake strengthened is considerably higher than the value of a building that was built in 1905 that hasn't had any work done to it. It's probably quite hard to insure now these days, to be honest.
Another thing, insurance-wise, with stock, what would be your recommended approach to insuring for stock, particularly like some stock will vary seasonally?
Yep.
Just like is the only option really to insure it on that 12-month period at the highest likely
Worst case
amount?
scenario.
Yeah.
Yep.
Even though you may not actually hold that stock.
The whole time.
Yeah.
Yeah, it's probably the best thing to do, because otherwise every other month you'll be trying to adjust it,
Yeah.
which will probably perhaps put a bit much administration and effort into adjusting it for the difference that you're going to find in your premium.
Yeah.
on it.
There's no way around that.
No. No. You could average it out.
Yeah.
If worst case scenario was you needed to make a claim and you lost all of the stock the day after they arrived, but you had agreed that you'd only cover 60% of the average of what the stock hold was across the year, then obviously the shortfall's on you, because the insurer will say you've lost 50 grand's worth of stock, we appreciate that, but you only actually covered yourself for 35. So they'll only go to the maximum. Typically with insurance, it's fundamentally about putting you back in a position that you were before the event. It's not trying to put you in a better position financially. Otherwise people would do silly things.
With the house cover, I know it's not so much to do with business, but
Yep.
in your experience, the projections that the insurance companies have given people, are they accurate, or do people, I know it'll vary depending on whether you've got a pool and what your house actually looks
Yep.
like, but
Yep.
are they reasonably accurate, or are they undervalued?
From my experience working for an insurance broker, they're pretty accurate. But again, the onus is back on the owner of the house to decide what it is. I know when it first came out, the building industry was saying on average it's about $1,650 per square metre as the sum that you want to apply. So if you've got a 100 square metre house, multiply it by $1,650, that's roughly the sum insured for your house. They've adjusted that now to about $2,000 for an average dwelling, and for a dwelling that perhaps has got some special features or used, recycled remove floors or whatever the case may be, it's probably at the 2.5 end or even higher. Varies depending on location as well, but generally accurate.
Okay.
Generally, I mean, a quick guide can be, what did I have it insured for last time? What's the valuation in terms of the RV on it, the rateable value of it? Do I think that that's changed recently? Do I think that that's been adjusted? Do I think that's fair and reasonable because of the renovations that we've done? We've just ploughed 50 grand into redoing the kitchens and the bathroom and all the carpets and the drapes. Council don't know about that necessarily. Insurance company doesn't know about that. So that needs to be factored into it. And with a number of the different insurance companies, they've got an online calculator that you can take yourself through now. So that allows you to have some control over what do I really believe the value of this is to me if I needed to replace it. And the other one around assets that's worth mentioning in the business sense is something called business interruption insurance. So again, Christchurch probably brought this to the fore. If there's a major event that occurs that affects the premise that you operate out of, that stops you trading, business interruption insurance is going to be the thing that's hopefully going to bail you out. Okay, so it needs to be quite physical, quite visible. So it hasn't happened, the catastrophe hasn't happened to the person, it's happened to the building. So in Christchurch, a number of organisations had business interruption insurance, restaurants for example. They're right in the middle of the CBD in Christchurch, they just can't operate because they're in the red zone, no one can get into them. They have business insurance, they can make a claim on that, depending on the level of cover that they've got, to say we still want money coming in every month. And we want it coming in for either 12 months or 18 months or 24 months, depending on the length of the policy they had when they put it in place. That allows that business to at least have some opportunity of continuity going forward and a bit of cash flow coming through.
Is that the same for primary industry or an outside business? If there was a flood, say, and you couldn't get to the site you needed to access?
The short answer to that is yes, but the long answer is it probably depends on the circumstances to a degree. I know there were a couple of examples again that came out of Christchurch where companies said, "Hey, look, we can't get the same amount of people to come and visit our shop. The shop's actually not damaged,
Right.
but there's not enough people within the CBD on foot to go around and walk around the place. So if they were just outside of the CBD and they're a retailer, they're in a really hard position because their physical premise is still open, they can still trade, but they just don't have anyone coming through. So in that circumstance, business interruption isn't really going to be able to help them because they physically can still trade.
What about, say, changes to government legislation or policy or something like that which affects your business, the trade that might come through the door? So you either can't trade or people can no longer access you. So things that are out of your control, can you protect yourself against that in any way?
I don't know that you can. It certainly wouldn't be a typical insurance. By kind of default, any decree that the government makes tends to be their own kind of decision. So can you insure against that? Probably not.
Or seek compensation or something, I don't know.
Yeah, even seeking compensation could be a little bit of a long arduous battle, unfortunately.
But not under an insurance sort of umbrella.
No, nothing that I've come across. Again, depending on the industry, there may be certain circumstances that it may be considered, but nothing that kind of jumps out.
Worth a conversation though with the insurance broker around when you're setting up the business.
Yeah, absolutely. Absolutely. And having that dialogue and communication with your insurance broker at the time you set the business up gives them a really good understanding of potentially what are the ramifications, what are the business, where do you operate from, who are your customers? Are you going to be exporting this stuff? Do you need to put that into consideration? In terms of assets, a friend of mine runs a dry cleaning business. They were growing and he decided, right, for me to really be able to push through production, I need a new machine. Can't afford to buy a new machine, so I'll get one from overseas. So he bought one from Germany, I think it was, and they agreed on the price and they put it on the boat. And he didn't even have to pay for it until it arrived in New Zealand. But he said it's got to be insured, because if this thing, we have a RENA disaster, the ship runs aground somewhere and the containers fall off, I'm still liable for it. I've signed a contract to say I will pay them. If it didn't arrive, still the ownership was on him. So he made sure that he had that cover in place, which was great.
Sort of goes on from what Les was asking before. I'm a beekeeper, and this is actually a scenario that I've dealt with and still haven't got a very clear answer from our insurance.
Yeah.
In the scenario where, okay, your honey, we'll say 90% of it is produced between December and February.
Yep.
15th of December, flood comes through, wipes out half your hives or whatever.
Yep.
They do not at that stage have a lot of honey on them, but they are not going to produce any honey
absolutely.
for that season.
Yep.
What am I actually covered for?
Yeah, you need to look at the fine print around that. But I know that, for example, you can get hail cover.
Yeah.
Right. So there probably is the opportunity of just making sure that you've had that dialogue, that the insurance broker understands your business, when are your peaks. So touching kind of a little bit on both sides, on the people side and on the asset side. So for farmers, for example, lamb farmers might have a peak in terms of when most of their stock's going to come. So we can insure them for a higher amount of cover during that peak season of stock when the lamb's coming in. So maybe a similar concept.
Beekeeping is a little bit tricky with that because it's kind of going, how much honey were you going to produce? Well, how long is a piece of string? Whereas, lambs, you can go, well, we had this many lambs, now we don't. So,
they may be able to base it on an average of what's been produced if the volume of beehives you've got has been relatively consistent over a couple of year period or something. Might be an option to look at.
Yeah, so you'd want to get that quite clear though, what
absolutely.
you're actually
Yeah, absolutely.
going for.
Because that's got a pretty big impact on obviously the revenue and the cash flow. Because if you're in the type of industry that you are, and the majority of your revenue comes around one particular time of the year.
Yeah, well that was actually the scenario that happened, was, I guess the flooding, what was it, 2 years, 3 years back now, whenever it was,
Yep.
and Bird Hill in Takaga was washed out.
Yep.
And suddenly we could not access our sites. Now,
Yep.
the road got fixed, thankfully. But
Yep.
we were in the scenario of not being able to
Absolutely.
do the work.
Yep.
And it is quite hard to get a clear idea when you're talking to your insurers of what they're going to cover and what they're not.
And there's probably a window that you've got where if you go beyond that, in terms of you can't get in for 3 months to that area, what's left is not going to be that worthwhile for you anyway, because you just haven't been able to attend to them.
Yeah. So definitely just get that quite clear.
Yeah, absolutely, absolutely. And you know, have a very open conversation with your insurance broker around, well, this is the scenario that's really concerning me. It's keeping me awake at night. So what type of policies that I've got would fit with this type of scenario? And it might be, well, we might be able to do something on here, or you haven't got that covered. So let's see if we can add that into your cover. So I work for Aon, and we've got 4 offices in the top of the south. We've got Nelson, we've got Richmond, we've got Motueka, and we've got Blenheim. I work out of the Nelson office. We've got 24 staff around the place, so we all specialise in slightly different things. So if anyone has any queries or they want to have a conversation with someone, by all means, just use me as the first point of contact, and I can get someone to touch base with you about your needs.
Just a quick question for you. How does a brokerage actually work with insurance? Do you pay for your services?
No, typically not. Typically our service provision will be free of charge. We'll place the business, depending on your requirements, with one of a panel of insurers that we deal with, and that insurer will pay us a brokerage fee for our time.
Right. And so you deal with a set number of insurance companies?
We do, depending on the type of insurance need that you've got. So typically around kind of assets and liabilities, some of it can be quite technical. So if it's marine, for example, or if it's forestry, or if it's aviation, it's a limited pool of insurers that are prepared to jump into that particular market. General public liability, there are 2 or 3 that we can choose from, or 3 or 4. Travel insurance, same thing, 4 or 5. And on the people side, there's about 4 or 5 main players that we deal with. Because we're dealing with their products every day, we understand maybe how to quickly cut to the chase and move to the right type of policy for someone. Take an example on the people side, for income protection, we would talk to someone about what type of business have you got, can you prove a loss? I was talking to a guy the other day, he's a panel beater. He said, if I'm not here, the guys are still going to do the work, the insurance companies are still going to send the business to us, and I'll still take my drawings and my salary out of the business. I said, you can't prove a financial loss then. There's no point in you having income protection that kicks in after 2 weeks, because you cannot demonstrate that you physically had that loss, because you could still take that money out of the business because the business will still trade. Same with the liabilities and the assets. If we know what sort of asset class we're talking about, we can very quickly narrow it down, and then what we call go to market. So we'll go to 2, if not 3 of those players that operate in that space in the market and say, this is the scenario for our customer. What are the best terms and conditions you can offer?
So you have a fair idea with, for businesses, what their, I guess to an extent, who they're going to best be served by in regards, and that's kind of the direction you steer them a little bit.
I mean, there are 3 or 4 main insurers in the marketplace in New Zealand. There are a couple that are starting to come in, one from China, another one from India. I would question, is that the best outcome for our clients? There was a company down in Queenstown, West Pacific Insurance Brokers, I think they were called, and they placed a lot of their business offshore with a Chinese insurance company. The whole thing went belly up. My organisation, Aon, got rung by, I think, the Insurance Council in New Zealand saying, can you go in and try and help these customers out, because they've got insurance premiums that they've paid, yet it's with an offshore organisation, and if they make a claim, they're going to lose GST, or GST is going to be added on, or however from an accounting perspective it was going to manage. They weren't going to get paid out in the equivalent New Zealand dollar. It was going to be equated to a US dollar or whatever the exchange rate was at the time, and it was just an absolute mess. So we stick with the main players, and we deal with them on a, as I say, kind of an asset class basis, and we'll go to them pretty quickly and cut to the chase and say, right, this is what we want to do for our client. But when you come and tell us what your scenario is, we've probably got a pretty good idea of where we need to take it, because we may well have come across something similar. Just as a bit of a final, as I say, I specialise in the risk management side of it. I can't stress enough, get this stuff while you're healthy. The amount of situations that we've come across where people have wanted to get insurance after the fact, or they just haven't got around to it, and it has a massive, massive impact on people.
If someone's just starting up a business and they've had a previous health problem such as a heart attack,
Yep.
does that bump their premiums up?
Yep, it will do.
That
Yep,
does?
yep.
Okay.
So the insurance company will look at all the different aspects of someone's scenario, not only the business that they're in or that they're going to operate in. Do they smoke? Do they drink? What's their height and weight like? Have they got a history of diabetes in the family? Have they had a heart attack? So there's an example that's kind of sticking in my head at the moment. Some clients I was speaking to 12 months ago, they were changing industries and getting out of what they were in and doing something completely different, but that was going to be a great lifestyle opportunity for them moving forward. There was lots of things going on in the business at the time, and they were setting up, and we just didn't get around to getting their stuff sorted out. The wife that was then diagnosed with melanoma, and the husband had 2 minor strokes. Getting insurance for them after that, or after those events had happened, all of a sudden became a whole different ballgame. We could still get them some insurance, but it came at a higher price because their risk factors had changed compared to the same person sitting next to them that's the same age and the same occupation that hadn't had melanoma cut out of them. So get the stuff while you're young, it's cheap while you're young, and adjust it, review it.
12 months after they have had their stroke or cancer, they're going to have those higher rates of insurance anyway, though, aren't they?
Yep. We got insurance on the wife. She's got a higher insurance premium for 4 years, and provided the cancer hasn't come back and we've got some clear scans, then we apply and we get it taken back down.
Right.
So there's some parameters that go with it. Smokers will typically always pay a higher rate until they give up smoking for more than 12 months.
So the sort of thing with, currently we have life insurance and mortgage, no, not mortgage insurance. Now, I guess with the business structure, you kind of would incorporate your insurance to cover, kind of overlap, so that you're not doubling up onto
Absolutely.
aspects.
Yeah, absolutely.
I guess.
Yep. Yep. So on the personal insurance side of things, you can't claim on income protection twice. It's like you can't claim on vehicle insurance twice. There's only one vehicle that's been wrecked and mangled. You can have more than one set of life insurance if you want to. But for most people, and again, I'm crossing over between kind of business and personal needs. In a business need, they might have invested a whole lot of capital to build up their business and make their plant and do what they need to buy stock in. In 3 or 4 years, they might have traded really well, and the requirements for the debt that they need to cover might be quite a bit lower. So we adjust that down. And likewise, in terms of a buy-sell, if things have changed, if they've got a new shareholder that's come into the business, and therefore the shareholdings percentage has changed, we adjust that. And if the mortgage has gone down, if your requirements are a little bit different, you're one big Wednesday, you adjust them down accordingly. So just being aware of them, having them in place is the first thing. Some cover's better than none. So having them there as the backstop, and then just making sure you keep an eye on them as you go.
Multiple income, so my own business and then working for somebody else, I can
Yep, you can insure both. Yep.
cover that.
Yep. Yep. And I don't know if Alison's gone into any detail around income splitting for businesses.
Yeah, we did that last week.
Yeah. So income splitting, we can look at it and say, well, if it's two people, husband and wife working together, again, he's the plumber, he can't work. The administration of the partner can't be done because there's nothing to process. So we look at, well, what's the income before it's split, and it's split for a valid reason. But what's the impact on the family, and we make sure that we put something in that's appropriate to that. Because from a very good accounting perspective, the business may be structured in such a way that there is as little tax there against the main income earner as possible, and that's just good practice.
Good practice.
But you just got to make sure that you've adjusted things accordingly on the other side, just in case.
Yeah.
Just in case.
Yeah.
All right, I'll leave you to it.
Cool. Thank you, Brent.
Thanks, Alison.
Very much. Let me know about Tuesday.
Yes, I will do. Thank you.
Okay.
Thanks.
All right. I'd keep you too much longer. I just wanted to touch on accounting, or how to keep your business records, really. 7. 7 is the number of years one must keep their business records for. IRD have been known to claw back 10 years, but the legal requirement is 7. That's the statute of limitations. So it's quite important to store your business records in a secure location. Do backups. Who does a backup on their computer system? 1 out of 6.
Oh, I think
Oh,
it does it.
sorry.
Oh, there we
yeah, I
go.
do some, but I'm just thinking, because I was thinking as I was driving out here, there's the cloud,
Yeah, and that's backed up anyway, so that's okay. If you're
So
you're
that
in the
counts
cloud,
Yeah, okay.
that's okay. So
0.
Part of it's Xero, and then they'll have another add-on to Xero now for my client management.
yes, you have got your client management.
Oh,
Yeah,
right.
so,
That stores client data, does it?
yeah, it's all up there in the
Magical link
cloud.
there.
Can you
Yeah.
see it in that big rain cloud?
Oh, look, it's
I'm just hoping it's all always going to be there, that cloud, and not disappear out from underneath. it.
My what I think about the cloud is it's in the internet, correct?
Mm.
If the internet goes down for a very long time,
Yeah, you can't get to it.
we can't do anything. We can't get to our banking, we can't do anything.
Can we insure against that?
Insure against the cloud.
Well, they talk about the phones
I
being
should have asked
unavailable,
Brent, yeah. Yeah, I mean,
and how that affects business.
exactly. So we will be in trouble. And not just everyone who's here, but everybody.
Yeah, so it's
Mm,
not just...
Yeah, apart from people who don't have any type of accounting system at all, and they should be just fine with their shoebox.
Those are your favourites, eh?
No.
Oh.
Yeah, if you bring a shoebox into me, I send you back out the door. Yeah. So, so the cloud is a good backup, okay? You can have software, MYOB, BankLink, QuickBooks, any type of accounting software, which could be just on your desktop, though MYOB and BankLink are going in the cloud as well, so they're there going that way too. So if you've got something that's specifically on your desktop computer, you do need to back that up regularly. That's quite important, because there's nothing worse than, and I've heard this before a few times, my computer crashed and I've lost all my accounting records for the last year, so I have to re-input. That would be a bit soul destroying. So it's important to back up. Even emails, most of them go on the cloud as well. So we just hope that cloud is rather large. So that's quite important. So you need to figure out how you're going to store your records. I've had stories about stored my business records in the garage and the mice got into them. Stored them in rubbish bags and my husband took them out to the curb but didn't take the rubbish. Yeah, I've had that one too. And if that happens, that happens. I mean, there was floods here, as we know, a few years ago, and a lot of business records got damaged. I had some water damage in my offices actually, and that damaged some old records. Just so happens that one of those boxes that was damaged, the Inland Revenue actually wanted something that was in it, but it got damaged. So unfortunately, that disasters do happen. Nothing we can do about it because it's hard copy, and I mean, if it was 6 years ago, if the information was 6 years old and you're just about ready to biff it, it's just one of those things. So yeah, the 7-year rule, and store it adequately if you can. But as I say, things happen. With the likes, I mean, I use Xero a lot. I'm quite a fan of Xero, and I can store receipts or copies of receipts within my Xero accounting software. I scan it, save it in there. It's in there. It's on that cloud again, and then I can get rid of that hard copy receipt if I wish. So that's quite useful. Database records, again, you've got them in the cloud. The other good thing about having a database of customers is that you can utilise that information for many different reasons. Like I do it for a newsletter, sending out to clients, and I use MailChimp for newsletters. Does anyone else do newsletters?
I know about it, yeah, MailChimp.
Yeah, so that's quite a good provider where you can get your database into there and send out a newsletter quite easily through email without having to attach the newsletter to every single email to every single customer in your database. That's quite time consuming.
Good for surveys too.
Yeah, SurveyMonkey I think is one they do.
Right.
Yeah, as well. So as far as accounting packages go, you've got to get one that suits your business. It suits your time frame of how much time you've got to work on it. If you are in an area which doesn't have great broadband, these kind of things won't work very well. I mean, obviously broadband is getting better, but there are some places, and I've still got some clients who live quite remotely and broadband is just not an option. So, and even like BankLink, and it was just a software package, you dial up, it wouldn't work on dial up. Now, historically, BankLink accounting software didn't work on Macs, but now that they're going into the cloud, anything, you can have any computer. So if you're in the cloud, this stuff is accessible through a login and password from anywhere in the world. You can be holidaying in Rarotonga and still pay your staff's wages, if you wish. Or still do your GST, not that you'd want to do that in Rarotonga, but if you wanted to, you could. You can access it from any computer. So I personally like that because I'm restricted with time with having a child, so I don't work. I do work full time, but I stagger my work, so I might finish at 3, but then I have to work when I get home while he's playing. So I can still do that because I don't need to grab my computer and take it with me.
And just a question on that sort of, because the one I'm using alongside Xero also offers the option of invoicing from that one. Is it better to invoice out of Xero or the other one?
It depends. If this one links directly with Xero,
Clinico, it does. Yeah.
Yeah, you can. Well, check. You may be able to invoice through this, and it automatically comes into Xero.
Goes into
So
Xero.
I've got a system called Workflow Max, which helps me manage the workflow in the office and helps with timesheet collation.
Yeah.
And I invoice through that, and it automatically
Shows
flows
up in
into
Xero.
Xero. I just have to go into Xero, and because all those invoices sit as draft, and I just have to approve them.
In Xero.
So then I manage my debtors in Xero.
Cool. Okay.
So just check that. Usually it will have some sort of Xero link or something
Yeah, it
like
does.
that.
It shows it on the Xero site that it links to it, and it says it in Clinico as well.
So just double check with the
Yeah.
provider, but you should be able to do that. Because sometimes, Xero invoicing is fine, but you might find it's a nicer look in Clinico.
Yeah,
or not.
It will be, because I can book appointments, I can invoice straight out of all of that in one, rather than jumping back.
Jumping back, yeah.
Yeah.
But that will
And
probably.
I can do that on my cell phone
I know.
as well.
Yeah, well, that's the other thing too.
It's
Apps.
really quick, yeah.
Apps are great. I like apps. You can get an app for your phone which will do your vehicle mileage. You don't have to get a logbook anymore. You can, eSmart. There's an app for your vehicle logbook I've just discovered. Check that one out. Because
You can buy a logbook.
Yeah.
It's all right.
Look, $3.
You can claim, you can,
Yeah.
Minus
and
the
then get the app
threw
as
the
well.
receipt away.
I'll bet you didn't.
but it could be easier on the app, I'm not sure. So there's apps or applications on smartphones and iPads for all sorts of things. I've got an app on my iPad which is like a type of Office, like Microsoft Office, but it's on my iPad because iPad's Apple and it's hard to do Word and Excel documents on that, but with that I can, and then I can save that in Dropbox. Has everyone heard of Dropbox?
Mhm.
Yeah, so I can save my document from my iPad in Dropbox and then I pick it up when I get back to work and pick it up on my PC. Or I can share a folder with my business partners who don't live in Nelson, or share folders with customers. I'm just sort of getting used to that, and it's quite a useful tool. Yeah.
Just a question, something really small scale, like I'm initially thinking, because I don't have many hours a week, and is it worth getting a specialised accounting system?
You don't need to. You can just get a cash book if you want to, or do a nice Excel spreadsheet.
Mhm.
I still have people who use these, and it's fine. Just make sure you total things, but a cash book like a manual one, or on Excel, just having columns set up for each expense type grouping, like vehicle expenses or advertising and that, and you have columns set up, so you have columns down there, total them down the bottom.
Okay.
Just as easy. You don't need to go to the expense of that. Not that they are expensive, but you don't need to.
They sound like much more fun.
They are. Yes, I've become quite techno-geeky with all this stuff now. It's kind of exciting. I think I probably was a little bit techno-geeky before, but that's okay. That's okay. The good thing with software packages, no matter what you're using, is you can get reports out of it. So you can get reports to see what your profit's doing. If you're with a cloud-based software, you can make sure your accountant is linked with that as well, so they can view reports whenever you want to have a chat about something. So the good thing is I can look at somebody's Xero account that I'm logged into. We can be looking at the same figures at the same time and having a meeting on the phone, especially if they live out of town. I can do a profit review partway through the year and then set up a strategic planning meeting. So I can advise that way, and I enjoy the advisory work as well. So this kind of stuff helps me give better service to customers because I can see what's going on. I can check GST returns, so someone can do their own GST, but I can go in and have a look at it. People don't have to drop stuff off to me anymore. So that's what I quite like. And also I can work from home if I need to. But with these types of software, that's fine. Backups, giving them to your accountant on a pen drive or whatever. If it is password protected, do please provide the password. I know that sounds like an obvious thing, but trust me, it's not always obvious. They don't always provide the password. So that's important, and just ask your accountant what kind of reports they want. Because a profit and loss report is pretty, but we kind of need a little bit more detail. So we might be looking for a trial balance or a detailed trial balance so that we can see all of the types of expenses. Not that we're going to audit or check anything like that, but we might say, oh, well, that looks like an asset, but you've put it under repairs and maintenance, that sort of thing. So that's quite important. And check the costings of things too. A lot of things with the cloud, they're going to be a monthly subscription, which is just fine. In the old days, which was probably only 5 years ago, you'd buy an accounting package a few $100s, and then you'd have to pay a yearly fee to upgrade it and get the latest update. Yeah, so things have come a long way since then. So basically just check with your accountant, and as long as it works for you, I think that's the best thing. I'm not a big fan of QuickBooks, but I've got clients who use QuickBooks, so I just get the reports off it. It's just I don't particularly like that particular program, that's all. It's not anything personal against QuickBooks, but I have clients who use it and I have no problem with them using it, is what I'm saying.
And IRD doesn't have a problem with scanned docs?
No, they don't now, and you're allowed to save them in Maori as well. You can actually have all of your information in another language, which is Maori. They've agreed that's fine. I don't have all my stuff in that, but scanned documents are fine, and also they've agreed that because with all this cloud stuff happening, you're allowed to have your documents stored out of New Zealand, because they realise that a lot of the backup storage for the cloud is out of New Zealand. So they have agreed that that's fine, which is good, because if they didn't agree to that being fine, we'd all be a bit stuck. But no, they quite like that idea, and they're also quite happy if you wish to invite them into your accounting system.
Give them access.
But I have had bank managers say it's quite handy if their client invites them in to the accounting system they're using, like Xero for example, because then the bank manager just go in and print reports however they want. I want to borrow some money. Okay, well, what's your profit like? Well, let's have a look. You can do it straight away. So it's actually making the bank manager more informed as well. Don't know if you've had that, Mark, have you? People inviting you into their Xero?
No. No one invites me.
Oh.
Trev might have some invites. though.
Yes, I think he has, yeah.
Yeah.
Yeah. So that's pretty much all I wanted to cover, was the fact that you knew about that and what you could use. It's pretty flexible out there. And that's really the end of my course.